to dial in. Always do appreciate it. And whether you're watching this live or on the Combine, I hope you find some useful information. All right, first let's just jump right in here. We're not going to be here for the full 20 minutes because, quite frankly, there's just not that much news that's out there, and the news that's coming isn't going to be here till 11 o'clock. So it doesn't really. It's kind of a slow news flow day. But really, there's four big things that are kind of brewing under the surface, and traders are waiting for these four things to materialize. The first is the stocks report. That comes out today at 11 o'clock. And if you remember a year ago, when the USDA released their stocks report a year ago, they changed the prior year's yield significantly, and it caused a big surprise in the marketplace. So there's a lot of people that think that maybe they're going to do the same thing again, because last year is the year that we had such crazy weather and things like that. So there's a chance that they can change the stocks and kind of reconcile some of those differences that have been lingering. I personally don't think that's the case at all. I think the stocks report's going to be just a kind of a moot point, and we're going to absorb it and just move right on and start. We're going to trade it for about 10 minutes and move on to the next level. But it's a thing, and it's out there, and it could be a market mover today. But we'll just have to see. Remember, the stocks report is one line on the balance sheet, right? It's just the beginning stocks number, and the big number is the second thing that's underlying everything, which is the harvest data. So if we don't have good harvest data to know what our current production is, then the beginning number is really kind of secondary and not relevant. That's why I don't think we're going to trade off of it very significantly going into today. Harvest isn't far enough along for us to get a really good indication on what the yields are going to be. If you follow Twitter, if you read news, you can find shocking horror stories of lower yields, and you can read stories of people picking up corn flat on the ground in Iowa of 250 bushel corn. You can read the whole gamut, and it's just too early to get a good sense. And I don't think the USDA is really going to do much. Even in the October report, I think they're going to wait until probably December before they really get aggressive on what that yield number is going to be. So the first two things are supply based, right? What is the stocks number going to be, and what is the harvest yield going to be? The second two things that are underpinning the market are demand based, right? You've got China. So China was obligated to buy $175 billion worth of total stuff from the United States in 2020 under Phase 1 trade agreement. To date, or as of August 31, they had met about a third of that. Now, I'm not just talking agriculture. I'm talking, everything, oil, the total package. So what that means is that during the last quarter of the year, they've got to buy $115 billion worth of stuff from us, and some of that stuff could probably would be soybeans, right? That's a lot. I don't think they're going to hit it. So that's created this undercurrent of, well, then they're just making placating sales. They're not really trying to comply. They're just trying to do enough to keep Trump from slapping new tariffs on them. And that could be the case. But I don't think so. I think the virus just shut everything down, and they're just delaying. So I think into the next year, I think you're going to see them really try to comply, especially if Trump wins re-election. So from a demand standpoint, they're going to slow down for the next 2 weeks because they've got a Chinese holiday coming. You've had USDA flash sales almost every day for the month of September, and they've bought an unprecedented amount. I mean, they're so far ahead of where they would need to be under traditional settings that it's scary. So they're going to take a break because of their 9-day Chinese holiday that starts tomorrow and goes through October 9th. They're not going to do anything during that time period likely, and then we'll see what they do after that. So I don't think the trade's going to digest that data as bullish or bearish. I think it just expects it to happen. But what the algorithms and I think the traders are really starting to struggle with is South America. The La Nina pattern that's developed in South America is a big deal. Now, I'm not a weather guy. I don't know anything about it, but I do know that big picture, La Nina brings dryness. Dryness reduces yield, and that could become bullish. So I think what you're seeing is the computer programmers, right? The guys that crunch all the data, they're starting to change their models. So we could start to see much more bullish, faster reactions to any type of weather hiccup in South America, because they're shifting from a oversupply standpoint to an undersupply standpoint potentially, because they've got to prepare for the event that the U.S. harvest is low, right? Beans below 50. The Chinese actually purchase, and South America gets in trouble with La Nina. That is a recipe for an absolute powder keg if those things develop. So you're seeing beans, and we're going to get to them in a second. So you're seeing some interesting things in the bean carryout. Corn is less of a powder keg, but it's still very relevant. So I've got the corn chart up here, and we've been talking about this. Nice sell signal here, nice divergences. Everything about this screamed probably a top. Now we're tracing a corrective pattern down. Lots of reasons to think that this is corrective and not just an all-out downtrend. I won't go into all of those reasons, but a lot of them have to do with volume. You're not seeing heavy selling on the way down. In fact, you're starting to see the funds build a long position even as we decrease, as prices decrease. So let's put it in perspective as to where we are on this downtrend. This circle right here represents the gap that was left open from August 20th and 21st, okay? Or August 20th, 25th. That's a weekly gap. It's a daily gap. It's on top of this gap that happened back here in July. It created this little island, or this set of prices down here that don't really have a home. Corn gaps have a extremely high probability of filling. It would be very unusual for this market to turn around and just not go fill this gap, because at some point it'll need to. It does not have to, but we talked about this last week. If you're going to retrace, you got 38.2%, 50%, and 62% right here. If you're going to retrace, what number is logical? What makes sense? And we said last week, we think we're going to retrace all the way down and fill this gap before we turn higher. Now, the problem is La Nina has moved in and into South America, and we've got some bullish catalysts underpinning the U.S. too, because basis is so hot. So if the trade doesn't think that we have a yield, an oversupply situation in corn, and beans don't go, likely we're going to come on down here. But if we're finding so much buying right here at this 360 level, if we don't break it pretty soon, then the odds start to favor it going back higher. So corn's at a really important inflection point right here, where it could turn around right here, or it could move down, another 20-25 cents and still remain bullish. So we're going to start opening back up upside as we trade lower. I don't think we're going to do it today, but in the coming days we're going to start some re-ownership, and we're going to start lifting some hedges, especially as this gap gets close. Because if that powder keg does happen, then it can turn in a hurry. By this point, a lot of new crop sales have been made. Those are booked. Those are done. We're not going to increase our risk profile significantly, but we are going to reopen some of that upside into further weakness kind of between these three lines. And I hope that kind of makes sense to people. I just don't think that we're going to come back and break this 335 low and move to a new contract low in corn. it can happen, and certainly anything can happen, and you can't be totally surprised by it. But that's just not where we're setting up. And I think if that were to happen, then something is going to change fundamentally. You know, we're going to tariff China. We're going to shut down ethanol. We're going to, you know, we're going to have a huge second outbreak. Something's going to change in this next 30 cents that's going to propel it lower. And we'll have some time to make adjustments if necessary there. But as it stands, I think you're looking to re-own at some point in this area rather than freak out and rush to sell. All right. Oh, and last thing, there's only 50 days left on the December options, so you're going to want to look out to May, July to buy yourself some time on those options. All right, let's look at beans. We've talked about beans before, and I'm going to pull this back to the weekly chart. Okay, here's your weekly chart. You have this big explosion. We came right back to where we were when we signed the trade deal, and we failed. That makes complete sense, right? We failed. We're going to find out what the harvest is before we can work higher. But I want to go back to 2016, and I want to give you the a little bit more. Where is 16? Right here, 16. I want to give you just a little bit more perspective on just how fast things can move in beans, because I think we've got a lot of farmers and a lot of people trading oversupply mindset, which is all rallies must be sold, and that could be shifting right underneath our feet here. So we rallied up into this range in 16. This is the same exact move. We moved from 840, we moved to 1050. We found a little bit of resistance. We traded in between 50 and 80 cent ranges for about 3 weeks, and then boom, we were at 12. And that move from 10 to 12 happened in almost 1 week. I mean, it was parabolic and moved extremely quick. There is if we are able to turn back higher and challenge these highs and break them, there's nothing between here and 12 to stop it. Now, hold on, wrong button, sorry. Now zoom back in here, go back to our daily chart. Could that be a reading here? That's the question. What we've got is we've got a nice move to the upside. This action has been corrective as well. I can show you a lot of things for the same, just like corn, that can explain why this is corrective. But in general, when you have an oscillator make new highs into a big move like this, and then rally back to its zero line, these are entry opportunities, not new downtrends that are forming, and likely these highs are to at least be challenged, if not exceeded. What we're going to watch really closely is this line right here, because I think this will be a major tell between an uptrend and a downtrend. This is a line off of our cloud indicator, and it's representing current price 26 bars back. So at a glance, you can see where we are in relation to 26 days ago. As we click over, this price level should provide some support and lift. What we want to see is this line tick over onto the prices and then start to turn back higher. That can last another 10, 15, or 20 days. So we can chop here back and forth sideways for another 3 weeks pretty easily before anything really significant happens. And what we want to see is this 980 to 960 range hold during that period of time, and hold above this cloud level. And hopefully what we don't want to see is this line creep sideways, break these prices, and then fall. That would be bearish and could turn quickly. And certainly that could happen if we end up with a much higher carry out, or weather pattern shift, or something shifts in the underlying landscape. So that's what we're looking for. We're looking for a re-entry point at this point, we're going to be buyers of reversal action because you don't know when this corrective move is going to end. And the recipe is there, right? You got risk from 985, 990 down to 960, 950, and you've got a potential gain of $2. And that's just how this technical pattern's set up. So we're definitely going to be trading to the long side here rather than the short side. And we're going to be looking to re-own anything that we've sold over the next couple weeks as this thing develops. I don't think we'll just go straight there right away, but we won't sit here more than 2 or 3 weeks before we make a new decision, and that will just happen to time out to exactly when the harvest is done and right about election time too. So everything kind of lines up and makes a ton of logical sense, and then it'll be bullish or bearish, and off we go. If it's bearish, I don't think the downside is apocalyptic. I don't think we're going to go back to a billion bushel carryout and go reverse back to new contract lows. If that unfolds, then something will change between now and then that will give us a warning signal. So I would be very patient in selling new soybeans. All right, last thing is wheat. Wheat is getting very interesting. If you read guys that follow Elliott waves, there's a lot of talk about a 1-2-1-2 pattern unfolding in wheat, and we don't necessarily trade Elliott waves, but we sure as heck aren't immune to them, and we sure as heck follow them because when they do hit, they're extremely powerful. And what a 1-2 pattern, 1-2-1-2 is the markets tend to move in 5-wave increments, 3 waves up, 2 waves down. So what you have here is a wave 1, then you have a wave 2, now you have a new wave 1 followed by a new wave 2, which would imply that this is a 3 of 3 beginning to start, which a lot of guys are calling Chicago at 650, and extremely parabolic and violent move to the upside here in wheat could be on the cusp of happening. Makes no sense to me fundamentally. I mean, it's in the worst shape of everything, but hey, weird stuff happens all the time in the markets, and most of the time a big move is underway before anybody knows why it's happening. So it definitely could happen. These indicators have run their divergence courses. They're at their zero lines, and they can easily move to an extreme upside or downside from here. So your risk reward, if you're a trader, you've got risk down to 463, and you've got upside near 550 or $6. It's a no-brainer to take a shot at wheat down in this level. So I hope that's relatively helpful. From our perspective, we're going to wait until these highs get busted before we take a big shot at wheat or we test something lower. We're going to be a little bit more patient, but I don't think we'll wait all the way up to here. I think we'll be focused kind of on this 490 level, and a move above that ought to turn bullish pretty quickly. But we'll just have to wait and see. All right, I hope that's a little bit helpful. Don't get too bulled up because we can go down. But our perspective is we're looking to re-own at the moment rather than rush to make new sales. We will talk to y'all next week. Have a great day.